Hello, everyone. So we are back for another weekly recap. So let's just jump right into it. So Rakuten made a major announcement this week. They have officially launched a new credit card that is an American Express credit card, which is pretty interesting. So, in case you don't know what Rakuten is essentially a oh, my necklace is crooked. I don't know what's going on there. Anyway, Rakuten is an online shopping platform that essentially pays you cash back for either shopping online or shopping in store. And so if you have been with Rakuten a long time, you know it used to be called Ebates back in the day. And so it's really a very simple platform. Let me see if I can share my screen and show you guys. Now, I have to admit, when I first learned about Rakuten, I thought it was a bit of a scam. Um, it seemed too good to be true, right? Like, do you mean you're really going to pay me just for shopping online and getting cash back? Regardless of how I'm making, the payment, it just didn't seem legit. So my one of my sisters put me onto Rakuten back in 2011. And so I've been using them ever since. I've made, I don't know, almost $3,000 using the platform. And it's pretty basic, truthfully. You will come to the online portal and you just come here and you look for any retailer that you want to shop with, whether it's Macy's, Target, um, Sephora, I think is an option on here. There's many, many options. And all you do is click on that retailer, another window will open up. It'll activate your shopping session, and then you just shop as you normally would. And as long as you complete a purchase, you qualify to receive your cash back. And so, with this credit card, you will not only earn the cash back through Rakuten itself, you also earn cash back with the credit card. Now, I will be posting a review of the card coming up soon. I recorded the video yesterday. I have to just edit, and we will get that out as soon as we possibly can. So, the structure of this credit card is 10% cash back if you use this card with any restaurants that are part of the Rakuten network. Then you earn 4% cash back on any Rakuten purchases up to $7,000. Once you reach that threshold, the cash back then drops down to 1%. Then you earn 2% cash back on groceries, and then and non Rakuten dining, and then 1% on all other categories. Now, what's unique about this credit card is you can also convert your cash back to membership reward points. So that's a pretty big deal, but you must already have an American Express credit card that also earns membership reward points. So those points are super valuable, particularly when it comes to booking travel, whether it's through American Express directly, or you can transfer those points to one of their travel partners. So, pretty big deal that you can earn this cash back and convert them to MR points. That for me makes a card very valuable and very different from your traditional cashback credit cards. It also is going to have other things like purchase protection, extended warranty, and you will have access to Amex offers. So if you don't know what that is, Amex offers is like a special shopping program through American Express where you can either earn cash back or earn extra points when you make purchases with certain retailers. And so if you do get this credit card, you too will have access to these offers. Now, in order to take benefit of them, you have to literally search through the Amex offers, either through the app or the website, and activate the offer, then make the purchase. Once you meet that qualification, you will then either earn the cash back on the purchase or extra points. All depends upon what the offers are. And those offers do change pretty much every week, definitely every month. And some of them do, in fact, expire. So it's always important to kind of check up on those offers, use them before they do expire. So that definitely was pretty big news that happened this week. Next, oh my goodness, very, very busy week. So Chase, let me stop sharing so we can just chat. Um, where is it? There we go. So Chase announced that they will soon be offering crypto backed loans. What that means is they will soon offer loans where you can use your cryptocurrency as collateral. I think that is so game changing, and it's pretty ironic considering that Jamie Dimon, the CEO of Chase, has been anti crypto for a really long time. He is a big skeptic. He very much does not or did not believe in crypto. And so to see us fast forward to today, where he's actually considering launching products based on crypto. So I think it definitely speaks volumes to where crypto has come or how far crypto has come from being something that people didn't take seriously to now where major banks are seeing them or are seeing crypto as an actual asset that's valuable and means a lot. So I think this definitely speaks volume. And of course, if Chase launches this, the other banks I'm sure will eventually follow suit. Now, right now, they are still working on navigating the nuances of how these loans would be executed. So I think it will be, well, not I think, they will be offering it sometime early 2026. So I think that's going to further take crypto up a notch when it comes to how serious people take cryptocurrency. Now, there's so many things that I wonder about that though, right? Because cryptocurrency changes in value significantly sometimes, right? There are large swings up and large swings down. So if you're trying to hold the crypto as collateral and the value changes significantly, if someone defaults on the loan, now you don't really have the full value to collect the money that's owed, if that makes sense. So, anyway, I'm sure we will see more as that plays out, but I know for myself, I am super intrigued to see how they plan to offer that in the future. Sticking with the whole crypto theme, American Express. They didn't announce this this week. I just found out about it last week and didn't mention it during our weekly recap. And so I'll share my screen again. And so American Express is going to launch a credit card in partnership with Coinbase. And that is also a pretty big deal. Further cementing crypto as a financial asset that now major banks are taking seriously too. So you see, there's a theme going on here, not intentionally, but this just happened. How things came across my plate today. So it's definitely a crypto themed live today. So we don't have a lot of detail. So let me take a pause for a second. So American Express is making some major moves, but they're making them in silence almost. They're telling us a little bit information to kind of pique our interest, but they aren't saying much. So just to kind of level set you what I mean by that. So Chase announced major changes coming to the Reserve card. They mentioned how the annual fee is changing, how the benefits are changing, right? They were very clear on what customers can expect. At the very same time, American Express also made an announcement but didn't say much. So they announced that they were making changes to the Platinum card later on this fall. And that was really it. That's literally all their press release said. And so they seem to be doing a lot of things behind the scenes, and nothing seems to be getting leaked. That's the surprising part. Usually, when something big is coming down the pipeline, some kind of information gets leaked some way, somehow. If not everything, a few tidbits of information tend to come out to the public. But for this segment going on right now, they're very tight lipped. Nothing's being leaked. So this is also the case with the Coinbase credit card. So all we know right now is that it will offer 4% Bitcoin back versus cash back on every purchase. It will more than likely offer protections like purchase protection, extended warranty, and that's about all that we know right now. There is a wait list currently. It is listed right here in the press release. It's coinbase.com/credit card. Actually, let's click on it and see what it says. Oh, can you guys wait? Hold on. Oh, you guys can't see it. Okay, hold on. Let me stop sharing and let's reshare. And let's look at this together. This is my first time seeing this as well. I actually did not look too much into it. So let's see. Up to 4% Bitcoin back on every purchase coming in fall 2025. You put your email address, you hit submit. Let's see. Zero trading fees. Is offering boosted rewards in stablecoin USDC. It's offering staking, so that's great. And $120 of credits, transaction credits on Coinbase. It's basically $10 credits each month. Okay, here we go. Extra benefits, retail protection, like I expected. It also offers travel insurance. That's pretty good. I like the idea of that. Ooh, it definitely looks very nice, very sleek, very chic. It has like blockchain code on it. That's pretty cool. So yeah, that is what we can expect coming this fall. But again, not much information, like just enough to get your interest, but not really saying a whole lot. So that seems to be how American Express is operating right now, but I totally understand. And again, we will see how this plays out as time goes. Continuing with the cryptocurrency theme, PNC Bank and Coinbase, they have launched a new partnership where PNC banking customers can now either buy, hold, or sell cryptocurrency from their PNC bank accounts. Now, I don't know all of the details of how the logistics and the semantics of that, but that is also a pretty big deal. And I think that's going to be a great avenue for investors who are, in my opinion, older and may not be comfortable with downloading the Coinbase app and navigating that, but they want to get into cryptocurrency and they can do it through the bank account, which is what they are more familiar with. So I definitely like where they're going with this. And of course, if this is successful, more banks, I am sure, will follow suit as well. So those are the major things that happened this week. I know there were some trade deals that were finalized between the US and Japan and the US and the European Union, but we'll save that for next week. I do want to jump right into this week's earnings calls, and it was a busy week. So I noticed that depending upon the season or the week, there will be so many earnings calls. There's too many to pick from, and I have to like narrow it down to a short list. Then there are other weeks where it's like I have to find something to talk about because it was a very quiet week. This week was not a quiet week. So we are going to first start off with Capital One. Just making sure I have the right financial statement pulled up. I do try to have everything already opened and ready to go. When I come on live, we're just jumping right into it. So Capital One did release their Q2 earnings for 2025, and they had a very interesting quarter. So just to kind of level set everyone, we're looking at Q2 results here in the first column. And then we will compare that to Q2 of 2024. And we will look at this column here for the variance comparison. So for revenue is up 31%, which is really good to see. But if we look at their net income, they operated at a loss in Q2. Now, the main reason for that is due to the acquisition of Discover. So lots of cash outlay went out the door to obviously pay for the acquisition. So that is why Q2 came in at a loss or at a negative net revenue. But no surprise there. That definitely was to be expected. So of course, now that the acquisition has been finalized, they are off to the races to transition everything from Visa and MasterCard over to Discover. And they are doing this in 3 or 4 phases. So in phase 1, they are focused on transitioning debit cards. So if you are a Capital One customer and you have a debit card with them, They will be transitioning, if they haven't done so already, transitioning your cards from whatever network you are on currently, whether Visa or MasterCard, to the Discover network. So they are doing that in phases, and they plan to have that completed by Q1 of 2026. They are also focusing on increasing their international space or usage in international countries. So they want to make sure that Discover is more widely accepted. So that is one of their main focuses for the rest of this year, and of course going into 2026. Definitely. Will continue to be big news, since this was a pretty big acquisition that happened between Capital One and Discover. And they also plan to tap into secured credit cards a little bit more. So Capital One and Discover both are known for their secured credit cards, but they do want to increase their market share. So they are focusing on that. And they also plan to focus on students, specifically college students, high school students, and making them customers and hopefully making them loyal customers. So that is their focus, to continue to grow the business. So let's look at the stock. Oh, it's already here. I already have it open. Sweet. So let's go ahead and take a peek at that. So Capital One stock right now is at $213 per share. Their call was on the 22nd. And so shortly after that, you see there was a nice pop or increase in the stock price. But since then, it has dropped just a bit. So let's go back. So at its peak, it was trading at $226, $228 per share. And now it's back down to approximately 213. So kind of interesting to see. Normally, when a company has a positive earnings call, the stock price tends to have that increase, and it tends to stay there or drops just a little bit. This drop here is more than I expected to see, so I'm not really sure what's going on with that, but this is what the market is dictating. So very interesting. So moving on to our next company, and the next company for today is Coca-Cola. And so I'm going to pull up their financial statement. So they too are reporting quarterly earnings. And so they had a slight increase in revenue of 1%, a increase in net income of 58%. And that's a pretty big deal. So just to kind of level set everyone, we are comparing this Q2 of 2025 to Q2 of 2024. So it's these two columns here. And so the revenue line is here, these two here. So that's an increase of 1%. I hate when they don't have variance columns here. That should be standard in most reporting, and it usually is. So, but anyway, I digress. That's my finance background coming out. So then if you look at their net income, it is up 58%, which is very impressive. So there are two things really driving this right now. So one, they've seen a slight increase in demand for their products in both the US and in Europe, specifically Western Europe. And they're calling it a disciplined expense management is also what's driving that income to be so high this quarter. And I think many companies are navigating the same approach, since we don't know how the economy is going to pan out for the next 4 years. So they're being very conservative when it comes to their spending. As we know, there have been lots of layoffs and scale back. So no surprise there. And now let's take a peek to see what their stock is doing right now. So let's go back here, share my screen. So here we see their stock price is about $69 per share. When was that earnings call? Was it July? Oh, it was yesterday. it looks like. So let's see. Um, that is super weird. It has this huge spike after trading hours, and it came back kind of steady since then. Hmm. Very interesting. Very. I'm not sure what to make of that, truthfully. Normally, I kind of have my opinion on movements of the stock, and right now, I don't really know what to say to that. Not really sure. So, I'll just leave it there. This is very weird chart to look at right now. This huge spike, no idea what caused that, only for it to drop back down. Not sure, but they do pay dividends in case you wanted to know. So now moving on to Southwest. So Southwest, as we know, they have been a tough spot for quite some time. And so they are making major changes to essentially get themselves out of the red. And so, wait a minute, where is the, oh, I know there's a chart here somewhere. Oh my goodness. Anyway, so for Southwest, their revenue is down about 1.5%. So rounding up to 2%. No surprise there. And then their net income, which is profit, is down quite a bit. It's down 44%. So sorry. Net income is down here. Excuse me. It's down 42%. And, there's no surprise there. Again, Southwest has been struggling for quite some time, but they had a positive spin on their earnings call today. So they are focusing on more revenue generating activities. So as we know, they implemented baggage fees started, I think, May 28th of this year. So it's no longer bags fly free. They do charge for checked bags unless you meet a certain requirement, I think you have to be like an A-list member. You need to have one of their credit cards, or you must buy a business class ticket. I think those are the 3 requirements in order to avoid paying baggage fees. And so, of course, that is one of their main revenue drivers that they're expecting to help turn things around. They also are implementing premium seating. So there is that. And they also started selling basic economy tickets. So they're expecting that those 3 components are going to help turn things around. So we will more likely see similar results in Q3, maybe Q4 of this year, going into Q1 of next year. You'll really start to see things ramp up. But there's a slippery slope that they're walking, right? So they have implemented these new initiatives to generate revenue, but some of them are going to turn customers away. So for Southwest, many customers only flew with them because of the free bags, right? And so if you now are charging for free bags, you're not any more special than any other airline at that point. And so now versus coming to Southwest because they are your preferred airline due to the free bags, now you can look at anyone because you're all charging free bags at this point. So that's the slippery slope that they are walking right now. But of course, they have to do something at this point. Southwest has not been doing well financially for quite some time. And so these are the things that they're implementing, and only time will tell if it actually is going to work. So let's take a peek at their stock price. Their ticker symbol is LUV, in case you didn't know. Okay, so here we go. Their stock is trading at approximately $33 per share. And shortly after earnings call, the stock price just tanked a bit, which is, not surprising. It's at about $4 or $5 per share. Not surprising. I think for Southwest, investors are taking the approach of waiting and seeing, like wait and see. It's hard to have confidence in what they're saying and if these things they're implementing are in fact going to work. And that's the one thing when it comes to the stock market. A lot of this is about speculation, educated opinions, and feelings. right? No one knows exactly what's going to happen. We can only go off of trends, history, and our own experiences to decide whether or not you think something sounds good or not. And that's essentially how the analysts in Wall Street operate. So right now, this chart is telling me that Wall Street does not have confidence in Southwest currently, and we are all just going to wait and see. Now, of course, once Q3 rolls around, Q4 rolls around, we see the results. If things improve, the stock price will also go up. If things do not improve, the stock price will further decrease. So, but I get it. They had to try something at this point. Keeping things status quo was going to run them out of business. But I will say, though, they will have to get very creative to either keep their current customer base happy or attract new customers and steal market share from other carriers. How will they do that? I don't know. But that will have to be their game plan ultimately if they want to stay in business. Also, strategic partnerships. So, as you mentioned with JetBlue, they too have been struggling since the pandemic, and they are navigating partnerships to improve their top line and their bottom line. So, first, they had the partnership with American Airlines. Now they have their partnership that they are launching with United Airlines. They too are going to be offering first class cabin. They are offering more lounges. They launched a premium credit card. So they're fighting for their life at this point. So between Southwest and JetBlue, they both have a lot of work to do if they do want to stay in business and ultimately grow their business. So very, very interesting to see. What was next? Oh, last but not least, Tesla. Now, Tesla, as we know, they have been on the struggle bus for so many reasons. So many reasons. Let me just make this smaller. So if I make it smaller, then it becomes, it's fine. Let's come back and share. So Tesla did just launch their, or did just release, excuse me, their Q2 earnings. And as we all know, it's not a pretty picture. It's not. So if we look here at, so this column here is their Q2 of 2025 revenue. This is their Q2 of 2024. So we're comparing Q4 to Q2. That's what Y over Y stands for. That stands for year over year, in case you were not aware. Trying to make it fit so it's not too big or too small. Hopefully you guys can see that and it's okay. Let me come back. Okay, it's fine. Okay, so revenue is down 12% year over year, and net income is down 42%. Ouch, that definitely hurts. So they did have this really nice, I guess, deck to share to their shareholders. And so the biggest factors causing this decline in revenue and net income, decline in vehicle deliveries, lower demand due to a variety of reasons, right? Also, the average selling price per vehicle is also down. So combining the two of those definitely did not bode well for the business. And so this is kind of where they are right now. And they will be working on turning things around. I'm not sure how fast they will be able to do that. I think between competitive products coming out in the market that are just better, the bad PR due to Elon, right? And so many other things. Those are the top two that are really hurting the business. And so they have a lot to overcome. They do ultimately want to turn things around. So now let's take a peek at the stock price. TSLA. Let me go back and start sharing. Oh, this is so ugly to see. This is so ugly to see. So once the earnings call happened, the stock definitely took a bit of a hit. It did bounce back towards the end of trading today, so that is a good sign. But if we were to look at Tesla stock in the last year, Definitely lots of volatility here. Lots and lots of volatility. So, and I think it will continue to be so until things kind of level set. And they have to overcome the things I just mentioned. So we will see. We will definitely see how that all pans out. That is it for this week's weekly recap. Now, if you do have any questions, feel free to put them in the comment section down below. I will come back and answer your question directly and maybe create a video to address it as well. If you're not subscribed to the channel, go ahead and feel free to subscribe and also follow me on my other social media platforms. I am on TikTok, Instagram, Facebook, Threads. I think that's it. I think that's everything. I think it covers all bases. So I do have all of that listed. I will put it in the caption down below if you are not following me there. And with that being said, have a great evening, guys, and talk to you guys next week. Take care.